Asian markets are showing signs of life on Tuesday following a big interest rate cut by the Australian Central Bank. Citing heightened instability in the markets, the Reserve Bank of Australia slashed its key rate by 1 full percentage point to 6%. Analysts had expected a half-point cut. The increase in the scope of the cut sent Australian stocks up by nearly 2%. It was a huge swing after stocks opened down by nearly 4%.
I think everybody's shocked. The market wasn't expecting it, and the general view was that they'd do a big move, which is 50 basis points, and we haven't seen one of those since the early 2000s. But clearly the current circumstances are just so concerning to the Reserve Bank that they want to make sure that we start to get financial conditions that are a lot less contractionary than the ones we have today.
Other markets in Asia seem to react positively to the bold move. Indices in South Korea, Singapore, and Taiwan all edged higher. However, Japan's benchmark did end down, falling 3%, but it had been down more than 5% in early going. Unlike Australia's move, the Bank of Japan decided to keep interest rates unchanged. Now there is growing speculation that the Bank of Japan, the Federal Reserve, and the European Central Bank may soon coordinate an emergency policy move.
We need a core group of finance ministers who will assume responsibility for anticipating issues, sharing information and insights, exploring mutual interests, mobilizing efforts to solve problems, and at least managing differences.
All of these moves follow a global sell-off Monday. The Dow Jones was down nearly 800 points at one point, rallying to finish more than 300 points in the negative. But U.S. stock index futures are higher this morning, suggesting that Wall Street might open Tuesday morning on the upside. Brian Thomas, The Associated Press.